Hi, everybody. This is Patrick Zielbauer from Infinity Futures. Welcome. It is 3:30 p.m. on Monday, the 26th February. Thanks for coming to the event today. Let's do some risk stuff, and then we will just jump right into the charts and get some questions answered. So thanks again for coming. All right, folks, trading futures, options on futures, and retail off-exchange foreign currency transactions involves substantial risk of loss and is not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not indicative of future results. Folks, only fund a futures account with risk capital. It means money you can afford to lose without lengthening your retirement horizon or affecting your ability to maintain your lifestyle, okay? And be cautious with the use of things like day trade margin. You know, we talk about this a lot. You see it in emails and all of our web pages. Just use day margin gingerly. Even if you use overnight margin per contract that you trade, you're still using a great degree of leverage. So the use of day trade margin increases your leverage and therefore your risk. It's a double-edged sword. All right. So if you're not sure where you fall in the risk capital curve of things, so to speak, or if this is appropriate for you, please feel free to have a discussion with whoever you work with in our office. We will be happy to have a frank discussion with you about risk. All right. My name is Patrick Zielbauer. I'm an AP or associated person of Infinity Futures. I've been working here for about 14 years. And in that time, we have worked with a lot of different trading platforms and data feeds and clearinghouses and so on. And as most of you know, we really have settled on the combination of Infinity AT, which is our order execution platform. Most of you are pretty familiar with it. It looks like this. Okay, that's our dome. And Sierra Charts, which you see running in the background as the market continuously makes new highs. Unbelievable. But anyway, that's really the core of our business is the combination of Infinity and Sierra together. For those of you who are here, you're probably here because of some interests in some way, shape, or form in Sierra. Although Sierra is optional, it is free here with a minimal amount of trading every 30 days, 10 round turns. So if you open an account with their company and you buy and sell one lot 10 times in 30 days, or 5 times 2 lots in 30 days, or if you just do a 10 lot buy and sell one day, then we waive the fee for that 30-day period, which is otherwise $20, $19.95 really. So it's very inexpensive to maintain an account here, even if you are using the charting program, which again is optional. Sierra is an amazing program. It's come 1,000%. I feel like every couple of months it increases its capability and usability by that amount. It's an unbelievable program. And I do encourage you to use it. Although, again, we understand that sometimes people come to us with a relationship with another charting company and they just don't necessarily want to use our charts. That's okay too. But they're an excellent deal, especially since most people are not going to be paying for them due to the low volume threshold. All right. So these events that we do, for those of you who are relatively new to Infinity, these events, I would call them intermediate to advanced level events. I'm not a developer. I'm not a programmer. I have no programming background whatsoever. But one of the reasons I like doing these webinars is that Sierra can kind of fool you into thinking you're a programmer. And what I mean by that is there are some things you can do in this program that you'd think you'd have to be a programmer to be able to do, but you don't. And that's one of the nice parts about this program is that if you can articulate logically the conditions you typically look for before you get into a position, there are some really neat things you can do in our software to allow you to be visually or audibly notified when those conditions are true. Or in the case of some of the examples we'll show today, actually take trades based on certain conditions being met in an automated fashion. And then you can let the trading platform or the charts manage the exit strategy for you. So the schedule, as you can see here for today, is as such. So I'm going to touch briefly on the color background based on study in general. I'll do like a really, really easy example. I'm going to briefly explain a strategy that I like to look at. Most of you probably know what it is by now, but it's an intersection of volume and a couple of traditional studies that we'll look at. I want to talk briefly about how to integrate these ideas with order flow, which I believe to be is a fairly obvious and intuitive process. I'll explain what I mean and why I say that. And also how we can integrate it with profile, which is a common, it's market profile is very interesting and it's a way of looking at the market that's been around for ages and ages. To me, it's a little bit less obvious how to integrate that with automated trading, but I'd like to touch on why I believe that as well. And I also ask you as my customers and prospective customers for your input. And then I'll talk briefly about how to look at this in a contextual way where we're not trying to just turn you into a red light, green light trader only. This to me requires maintenance. I think one of the reasons why many systems or automated systems don't do well is they can't adapt. So I'll talk a little bit about what I mean by that, tie it all together with this trading system based on study that we've got. I'll show you briefly how to use the replay function in Sierra, and then we'll be done. If anybody wants copies of the files that we go through today, please just email your rep in our office. We'll be happy to send them to you. They're free. You know, this is not a sales presentation in terms of indicators or anything like that. You are welcome to take the stuff, use the recording, work backwards, peel it apart, do whatever you need to do to make this work for you. All right, so please feel free to request those. All right, so let's go ahead and get into it. I'm going to turn, I know the screen really hasn't been on here. That's okay. I'm going to take you through the schedule here in just a minute. So the first thing that we're going to do is talk very briefly about the color background based on alert condition study. And what I'd like to do is give you a very simple example of what this is. So for those of you who are new to us, this will make sense very quickly. For those of you who have been with us for a while, bear with me a little bit as we go through this. So first, I'll just open up, let's just use a Dow chart here real quick. All right, so here's a 5-minute Dow chart. And what I'm going to do is first add a moving average to the chart. So right-click studies, I'll just add an EMA. I think my default is 8. Yes, it is. So there's an 8 EMA. And then what I'm going to do is add a MACD. So let's add a MACD. Okay, so there's a MACD. So on the chart, we have an 8 EMA and a MACD. So these are only 2 studies that are relatively basic and easy to follow. So this is not a stellar example, but it should drive the point home. The idea here is that if you have a series of conditions that you like to look at, then you can tell the chart to display to you a certain, like a highlight, or the bar changes color, or the background changes color when those conditions are met. In other words, you're basically writing your own indicator. And all you need to do is learn how to use a little bit of basic syntax that Sierra makes available. Greater than, less than, equal to, cross from below, cross from above. It's very basic stuff. It's very Excel-like, simpler than Excel. It's not actual programming. So the first thing that you need to be able to do is identify the condition that you want in English. Like, what do you actually want to see? Well, in this case, let's just say that I want to be notified when the market is above its 8 EMA and the MACD differential, which is the bar down here, is positive, meaning above the 0 line. So let's just say those are the 2 conditions that I want. What we can do is first identify what study number each of these are on our charts. And that is identified by this ID number here. So the moving average exponential is ID1 and the MACD is ID2. Now with the moving average, there's only one line, right? And that's what we call a subgraph. There's only one subgraph because there's only one line that's part of an EMA. But with the MACD, there's going to be several subgraphs. There's going to be the MACD line, the slow line, or which is otherwise known as the moving average of the MACD, the differential, and as well as the 0 line. So you need to be able to identify which piece of each study that you're looking for. All right, so the way to do that is to go to the settings section and go to the subgraphs tab at the top. And you're going to see this SG with a number after each piece of the study. So as we said with the EMA, there's only one subgraph. So it just says SG1. So the way that we're going to identify the 8 EMA is by using ID1 dot, like a period, SG1. So here's how that might look. And I usually keep Notepad open because I like to go back and sometimes it can be hard. If you're using lots of conditions, it can be hard to remember all this. So the way I like to keep notes as I go, and you might find this handy too. So for my 8 EMA, that's going to be ID1.SG1. So that's how we're going to refer to that. All right, so now we've got that taken care of. For the MACD, let's go to the same section. So we go to the settings, go to subgraphs, and you can see here, just as we anticipated, we've got 4 subgraphs to worry about. The one that I care about in this case is the SG3, which is the MACD differential, that's the bar. And I could also care about SG4, which is the 0 line, but I could also just use the number 0. So that's kind of a different, you can kind of go either way with that. But for the sake of really utilizing the tech, let's go ahead and use the subgraph identifier. So we want to know when ID2, which is the MACD, SG3, which is the differential, is greater than ID2, which is again the MACD, SG4, which is the 0 line. So we want to know when the differential is above the 0 line. So if we want to put that in our notes here, we could say MACD differential is going to be ID2.SG3, and the MACD 0 line is going to be ID2.SG4. So we're starting to comprise a condition that we're going to create using these values here. So each one of these represents the facet of the study that we've been looking at. All right, now what do we do next? So we've got the 2 studies on the screen. Where do we go from here? So the next thing that you're going to do is add a study called color background based on alert condition. You could also use color bar based on alert condition, but for now I'll just do color background, so we'll just add it. And in the settings section for this particular study, this is where you're going to, in the alert tab, you're going to put the condition that you want to occur. So because we're using 2 different conditions, we want to use an operator that Sierra uses called AND, which means that both of the things that we're looking at have to be true, not just one of them. And the way to write a formula like this is very, very simple. And again, when you look at these formulas, sometimes for the first time, they can look really intimidating, but when you go look at them in pieces, you can see they're really not that bad. So here's how the formula might look. And again, it's very, very plain English. First thing we want to know is when the current price is above the ADMA. We use the letter C to define the current price or the closing price of a bar. So when it refers to prior bars, it's C, or close, the closing price, the last price of the bar. If we're talking about the current bar, which is going to be evaluated in real time, it's the current price. So either way we use C. So it's not like you have to use 2 different operators. So we're just going to do C is greater than ID1.SG1, like that. And then we're going to separate it by a comma. And we're going to say, okay, the differential is greater than, greater than the 0 line. So you start to refer to these things and you look at this thing and you start, instead of seeing this, you start to see MACD differential, because you know what this means. So we have these 2 different conditions separated by a comma. What you do is put the word and in front and put the whole thing in a big parentheses, like this. So when you look at this formula for the first time as a brand new person who's never used Sierra before, and you see something like this in the alert condition, I can see why this would be intimidating. But when you go through it like we just went through it, all of a sudden you piece it together and you realize it's really not that bad. You just have to know the conditions you're looking for, and it helps to say them out loud. All right, you start to inventory your decision-making process. It's a useful exercise anyway. So once we've got this in place, in the subgraphs tab, we can pick a color. I'll just do this like light blue color. And we just push apply, and we're going to get an immediate visual response. And we can see that the background of the chart is now changing color whenever the market is above the ADMA, wherever the bar is closed above the ADMA, and the differential MACD is positive. So this is a gross oversimplification, in my opinion, of the use of this strategy. But what you as a customer can start to do is go through the things that you look for. All right, it's not probably not just going to be an ADMA and a MACD. It might be a series of other things, but it could be 3, 4, 5, 6 filters where you are sitting here trying to process this decision making on 8 different time frames and 20 different markets. I'll say it again, decision fatigue is real. It's a real thing. So this is an exercise in forcing you as a customer to inventory your process. You'll find that there's probably a lot of stuff on your chart you never even look at. And it's an opportunity to clean up the screen. So once you start to build something that comprises the conditions you look for, you could even hide the moving average and the MACD. If you just want to be told when the market's above its ADMA and the MACD differential is positive, your screen might look more like this. So there might be very valid reasons to see the line on the chart. If you're looking at the trend of the line or there's some reason why you want to see the lines on the chart, no problem. But there's probably equally as many situations where you don't even need the info. You just need to know when the condition is true. That's a situation where this could come in really handy. And in my opinion, significantly reduce the amount of decision making you're forcing yourself to go through on a daily basis. So just to kind of go back to our schedule here for a moment, this is the why. The why of this study is it is a great way to pare down the amount of data that you're forcing yourself to process on a daily basis. It just so happens that this same code, the same logic can apply very easily to the trading system thing we're going to touch on here in a minute. All right. Okay, now let's go to another chart book here very briefly. I'm not going to spend a ton of time on this yet, but we'll come back to it, I think, if we have some time. And this does evolve as time goes on. But basically, I have a strategy that I like to follow that involves the value areas, high and low, and the CCI indicator here. It's basically a combination of volume profile and a traditional indicator, as I said, the CCI. And basically what it does is when the market breaches its value area high, which is like this dotted line at the time. This is where the value area high was. The green line is where it is right now. The idea here is if the market breaches the value area high and the CCI hits a negative greater than positive 200 or less than negative 200 level in the same bar, it takes a counter trend signal. So it's a counter trend strategy, which is dangerous for some people and great for others. It works a lot better in a choppy market than it does in a trending market because you're looking for sort of a reversion to the mean. But there are some filters that can easily be applied here. And if we have some time, we will touch on that. There's some questions coming in. I will get to the questions, I promise. But I do want to sort of keep things moving here. But the general idea is that if you're into volume profile, you probably care about things like value area high, point of control, and value area low. And what this strategy basically does is it counts on the idea that there's usually a flurry of activity when the market breaches a range that has been previously well established. So a value area, which is, again, the distance between this green line and this red line, 70% of the volume that is traded in this session is traded in between these areas. So if the market breaks its value area late in the day, that is a strong indication of a trend that might not slow down right away. If it breaks it earlier in the day when that range hasn't been as well established, then there's, in my opinion, a stronger likelihood of a retracement. Okay. Keep in mind the trades you see here, we'll touch on some of this stuff. This is all simulated. This is not a real account. So just want to be clear about that. Okay. All right, cool. So that's just a very brief explanation of that. We'll come back to that here in a minute. So what I'd like to discuss, since we did put this in the title of the event, is how would you integrate an idea like this into with order flow? So I made a chart file recently. I called it the volume delta imbalance sample. It's up here. Again, everybody who wants a copy of this, you can have it. And basically what this is doing, and this looks crazy, I know. So for those of you unfamiliar with Sierra, your charts don't have to look like this. This is just something I made actually today. And what I did was I built a strategy that fired trades when, and this is on crude oil, and on a very short time frame, 55 ticks or 55 trades. So this is a very, very fast chart. As you can see by the times, there's lots and lots of bars at the bottom. There are lots of times. This is very quick. Basically what this is doing is it's selling the market when the volume on the bid is dramatically exceeding the volume on the offer. And it's buying the market when the volume on the offer is dramatically exceeding the volume on the bid. So let's look at some of these numbers. Okay, I'm not sure how visible these are because I know this is a big screen and it might be tough to see, but let's use this example here. So this red candle where you see the -1 at 64.08 flag here. If you look down here, you're going to see the bid volume on this candle was 119 contracts and the offer volume was 14 contracts. And you can see the total volume is 133 contracts. So there's a differential in this case of -105. What this study is looking at is it's looking to see when the bid is really getting hammered. So bid volume is like when a human or a machine is hitting sell market as an example, sell, 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 lots of volume hitting the bid. Okay, they're either trying to get short or they're long and they're trying to get out of something as an example. That is where you're going to see the bid volume really amp up. The offer volume is the converse. So if the market, if a program or a person or trader, group of traders is aggressively buying the market, you're going to see the offer volume go up higher than the bid volume. So what this is basically doing is it's sending a trade right when it sees that threshold being met. So what is the threshold, and how do you determine this or decide what it is to be? Well, let's look at my conditions. So now that we've seen a basic condition, let's look at one of the some of the ones that I wrote here, and hopefully this you'll agree this is not that intimidating. So if we go to the alerts tab, here's the condition that we're looking for. There are two conditions in this section. The first one is this. Okay, ID1.SG2 is greater than 100. Okay, if we want to go hunt down what ID1.SG2 is, let's just go to our studies here. You'll see numbers, bars, calculated values, ID1, and that's what this study is down here. If you go to the settings section and go to subgraphs, we can see that SG2 is the total volume, ask volume and bid volume total. So ID1 SG2 is greater than 100 contracts. That just means that we have to have 100 contracts trade before the system even thinks about doing anything. The idea there is to prevent a trade from happening like right at the beginning of a new bar when no volume is hit except maybe the first order. So we want to see at least 100 contracts trade first. And again, keep in mind this is a 55 tick chart. So if you want to do this on a 3-minute chart or a 5-minute chart, you're going to have to increase this number if you want it to mean anything, because 100 contracts is going to go really, really fast in crude. So the first part of our condition is that ID1.SG1, in other words, the total volume is greater than 100, and then ID1.SG6 is greater than ID1.SG7 times 3. So what that basically means here is that the bid volume is greater than the offer volume times 3. The bid volume down here is SG6, I believe. Oops, sorry, I'm on the wrong study. Ask volume SG6, bid volume SG7. So what this is basically doing is it's sending an order when one side is exceeding the other by a certain factor, in this case a factor of 3. So the idea there is that if it's really slamming on one side of the bid of the offer, then we're either going to fade or follow the move. And you can do it either way. There are reasons why one would want to do it one way or in the other way. All right, but what we're going to end up doing is using these same conditions in our trading system based on alert condition study, which basically takes this whole color background idea to another level. And instead of just notifying us when something is happening, and in this case, it's actually sending a trade. All right, and that's ultimately what we're working towards. So order flow, what I mean by, in my notes here, what I meant by fairly obvious is that order flow traders tend to be very active, like scalper type traders. They're looking for immediate signals. It's almost like you're trying to win a technology game, which is really hard to do being a retail customer unless you're, co-located at the exchange and, have a staff of 100 MIT grads and so on. Of course, it's hard to win that battle. But the idea is that if you believe you have some kind of edge that is related to bid or ask volume, this makes a lot of sense because it's a quick way to get the order in without you having to click the mouse. All right, now when it comes to profile, and again, I'm willing to hear an opposing viewpoint here as well. I believe this to be a little bit less obvious. People who tend to trade with TPO, or otherwise known as market profile, they tend to be a little bit less active. They're looking at charts that usually don't update except for the last price. They don't update except for every 30 minutes because every block in a traditional profile chart takes 30 minutes to build. And they just tend to be a little bit more judicious about the frequency with which they're trading. It doesn't necessarily make them any better or worse traders, but the immediacy of the entry is less obvious. So with profile trading, I don't necessarily think that using this sort of a trading system based on alert condition study makes a ton of sense. One thing that you could do if you are looking for a flurry of activity around a certain area is you could add a, let me just open up another chart here real quick. Let's open up another Dow chart. There is a study that we've got that is called TPO profile chart, which is the actual profile. So this is what a TPO profile chart looks like pretty much by default. I'm not sure if I've customized anything here. No, I haven't. So this is a this is a basic TPO profile chart where each block represents 30 minutes of time, and it's basically a measure of how long the market has spent at a certain price versus relative to other prices. But usually when people are looking at TPO profile, the areas they care about the most, besides the distribution of the entire thing, which they can look at very easily, is the value area high, all right, the value area low, and the point of control, which is that pink dot. So the top of the gray section, the bottom of the gray section, and the pink section right here, which represents the what is referred to as the point of control, the price at which the market has spent the most time. So usually profile traders are looking at those values. If you want to know what those values are without going this direction in terms of your charting, you could actually remove the TPO profile chart and just add the TPO value area lines chart instead. So what that does is it keeps the existing structure of your chart, and instead it just adds the value area high, the value area low, and the point of control. This looks kind of funny because all these value areas lines are below the market, because that's because the market was running up so heavily in the afternoon and it didn't spend as much time up here as it did down here. So that's why it looks this way. So if you do want to automate based on profile, unless you have some idea that I haven't yet thought of that would make reasonable sense, you could just use the TPO profile or the TPO value area lines as opposed to using the profile itself, because more than likely you care most about these three lines or areas than you do anything else. At least I'm guessing so. All right, so that's what I wanted to touch on, and what I meant by how to integrate this with profile, which is to me a little bit less obvious. All right, and we are going to do some examples here in a little bit. So I want to go back though before we do to that original chart book that I had mentioned here with these different markets. And actually, I'm going to focus on the NASDAQ. I made one that was really just the NASDAQ. And there's a reason why I wanted to show this. How many people have been trading the NASDAQ recently as a result of the relative volatility of that index? It's been, I can't say as a firm we necessarily have done a ton more, but I've noticed a lot of my clients trading more NASDAQ lately. It seems like it's a little bit, people are interested in the swings, driven by the tech stocks. So this has been coming to the forefront a lot lately. And one thing I noticed when I was doing this testing is, and let's look back at some of these examples here. And again, these are hypothetical trades, but let's look at some of these. So what this system is doing, again, folks, is when the market breaks down below that red dotted line and the CCI is less than negative 200, it goes long. All right, if the market goes above the green line here, the value area, the value area high, and the CCI is above 200, it goes short. So that's why I meant that a system like this does really well in a choppy market, because the market is gyrating between these two areas. You're just getting lots of back and forth. You know how traders sometimes say, well, the market's too choppy, I don't like to trade a choppy market. There are ways to trade choppy markets. This is an example of a way to trade a choppy market. But the danger of using a system that is counter trend in a market like what we've seen lately or in general is that you really have to have the guts to bail, because every now and then something's going to run away from you like it did maybe at the end of the day today. And one thing that I have found is that the market does often retrace below that value area high, but sometimes, especially with the NASDAQ, I mean, that thing can run 10 or 15 points before it starts to turn around even a little bit. And what I started to do with the system was I started to say, wait a second, this thing is getting in early, frequently. It's getting in early way too frequently for my liking. So what I did was I added a 5-point buffer to the short side and the long side. And it's as simple as adding a +5 in the code. So I've got a bunch of code here. This is basically saying that the market's got to be, we got to be above, or the value area has got to be crossed from below. We've got to see the CCI be above the 200 level line. And then the high of the bar, I added this condition here. The high of the bar has to be greater than the value area +5. So before it would take the position right when the market tripped up through that value area. But what I did here was I added a 5-point buffer, which means the high of the bar has got to be greater than the value area by 5 points, the value area high by 5 points. And what that did was it slowed down the entry. So instead of just getting short immediately as the market is ripping up through that level, it waits just a second basically to see if it goes a little higher, and then it goes short. So in the case of the NASDAQ, it's only $20 a point. It's only $100. But the idea here, it goes back to what I was saying about how to do this in a contextual way, is that you have to be nimble. You have to realize that, okay, things are a little extended right now. Maybe it's worth the idea that I could add this little buffer in here. What's the worst that can happen? The worst that can happen is that the market doesn't get to that level and you miss your short. Or to the downside, if the market is going lower and it doesn't go all the way through the value area low by 5 full points and you miss your long. But you might save yourself $100 a contract a few times a day if you take a few of these trades per day. So that is what I was getting at by looking at things in a more contextual manner. It's not just red light, green light. It's the constant evaluation of the condition and how to incorporate that into what you're doing on a daily basis. All right, so that is the objective. So again, these are just hypothetical trades. It's they're all jumbled up. A lot of this happened really, really fast. So I'm not going to go through. It'd be pointless to really go through all of these here. But the general idea is when the market's moving quickly and it runs up through that value area high, it has a tendency to retreat. Sometimes it doesn't. So again, you have to be prepared for that. You also have to be aware that sometimes the market's going to rip through that level, and in a volatile market, you may want to give it a little room. And that's what I've done here with the system. All right. All right, I'll get to all the questions here. Appreciate them very much. Yes, we are recording the webinar and we will post it on YouTube. All right. Okay, so what I would like to try to do is tie things together here based on, you're using this trading system based on study. And let's try and go through a couple of examples about how you could actually set this up. And then what I want to show you is how you can replay the market. All right, so I think that I think I'm going to use this as an example because there were some trades here that I guess I would consider showing as a replay. Okay, yeah, let's do that. So I'm going to zoom us in a little bit. And what I'm going to show you is what to do to get the actual trading system up and running. So there's a study that we have in here that's called Trading System Based on Alert Condition. Right here. And the reason I like to use the color bar study or color background study first is because there's no order being sent. There's no risk of, punching the wrong button and sending trades. But the beauty of the color background logic that we are creating is that you can just copy paste it into your trading system. So what I did was I added a study here called the Trading System Based on Alert Condition. I renamed the study Auto Sell, so don't be confused by that. You can rename it anything you want. You can see the actual name of the system or the study in parentheses to the right. I just did this so it'd be easy for me to distinguish between my sell and my buy. All right, so you add the Trading System Based on Alert Condition. And what I would do is I would go to my color background, which is my short signal, and I just copy the text like this. Just Control C, copy the text. And then I would go to my auto sell or my trading system based on alert condition. And you just paste the text in here. All right, so you just paste it in here. Now, there are numerous inputs that you want to make sure you get right when you're using this study. Okay, so this is really important because the last thing you want to do is accidentally send orders, to a live account or something if you didn't mean to. All right, the first thing I want you to remember is that how you log into the platform should dictate whether you're logging into live or simulated live or a simulated environment. So if you want to trade for real, log into live mode. If you want to paper trade as a live client, log into simulated live mode. Don't log into your live account and then try to tweak something inside the software that makes the orders go or not go. All right, that's a mistake. You will end up costing yourself some money, most likely. So let how you log into the software dictate the entry. Okay, whether you're trading, live or practice. All right, the first thing that you're going to do once you add the study is change this enabled from no to yes. So if you want this to be active, meaning we're even going to see the alert on the screen, change it to yes. Number of bars to calculate, the default's always been 2,000. You could make it higher if you want. Just bear in mind that if you put 50,000 or something here, it's going to be chewing up a little bit more resources because the charts are calculating really, really far back. The order action on alert, in this case, it's a sell entry. So this is a sell entry, meaning when this condition is true, we are getting into the market short. The reason why it makes a distinction here between sell entry and sell exit is that you can also use similar conditions to exit the market. That's not something I've really employed here yet. I'll try to do it for another webinar that we're going to do, but just make sure that you have sell entry selected if you're looking to enter the market going short. Evaluate on bar close only means that you want to wait to fire the trade until the bar closes. So most people here would probably say no to this. I believe it actually defaults to yes. So if you want to have the trade go immediately when the condition is true, then you want to make sure you leave this at no. Evaluate on bar close only should only be checked if you want the trade to fire at the actual close of the bar if the conditions are there. All right, this is an important one. Send orders to trade service. If you have this set to yes and the study is enabled and you are logged into your live account, you will be getting live trades. So if you want this to go to infinity and transact, then this needs to say yes. All right, if you leave this at no, you'll just get the alert on the screen. You won't actually get the trade, which could be just as useful. Maybe there are situations where you want that, but just to give you a heads up, send orders to trade service. If you want them to go, that should say yes. When we go into replay mode here in a minute, this is going to have to be set to no. So we'll come back here in a minute and disable this just so I can show you how to replay the chart. But the chart will not replay if this is trying to send a live trade. Maximum position allowed, I have mine set to 10. You could really set it to whatever you want. Maximum long trades per day, short trades per day. I just put 100. This would never take 100 trades, but you can cap them. All right, the enable debugging, you can leave that at no. Cancel all working orders on exit. That defaults to no, although I suppose you could set it to yes. Basically what it means is when you get out of a trade, does it do a cancel all real quick? And I suppose you could say yes if you wanted it to, but it defaults to no. And then the newest thing that they added here, Gigi, I think you were asking, is they just added a time range. So if you want this whole thing to only be operating during a certain time, you could change allow trading only during time range. You could change that to yes. And then the start time and the end time you would put in here in 24-hour time. All right, so that has just been added. That was right after the last webinar. I got a lot of inquiries about that. I asked Sierra to add it, and they did. Okay, I believe it is working, Ed, but if you have reason to believe it's not, let us know. Okay. It's going to be based on the time zone you have your chart set to. Okay. All right, so that's our sell, auto sell. So I've got the condition in here. It's the same condition I use for my color background study. And then we've gone through all of our inputs. For the subgraphs, for your buy signal, the sell signal, I like to do the point on high as the sell signal. You could change this to be whatever you want. There's a draw style thing down here where you can pick, whatever it is you want, like point or star or triangles or whatever. I like to use point on high for the sell. And then in this case, since this is a sell entry, there's also an option for buy because the study doesn't know whether this is a buy or sell when you add it. You have to make that determination in here. There's a buy option also. You want to make sure you hide that so you're not seeing both of them. So on my sell signal, hide the buy side, and then select your desired draw style for the sell side. All right, on the buy side, it's basically the opposite. So I have point on low selected. Okay, I've got the sell side hidden. And then everything else is pretty much the same, except the order action on alert is set to buy entry instead of sell entry, which would make sense. All right, so that's how you might set a system like this up. All right, there's a bunch of other studies on this particular chart here. Not a lot of these are incredibly relevant. In fact, you'll see that a lot of them are actually hidden. Okay, sometimes I try to clean the charts up a little bit. For example, if I don't want to see this dotted line here is crude oil in the background. This red line is bonds. I can hide these so they get out of the way. I have a tick thing at the bottom here with some lines. This is the NYSE tick. I was adding this as a way to try to filter out some premature short entries or some premature long entries. For example, if the market is going higher through the value area, but the tick is above 1,000, don't actually take the order or take the trade. That was one example of an idea, just to try to stay out of the way of a freight train, so to speak. But for the time being, I'll actually hide these so they're just not visible, and it just cleans the screen up a little bit. All right, so we just basically have the value areas on the top here, and then we've got our CCI. All right. Now, for those of you who are new to this, and I know that we're just kind of like blazing through this idea, don't give up. I mean, the very first thing that you should be doing, if this is something you want to even think about employing, is get into your email or on a piece of paper and write down a good example of a series of conditions you like to follow. You'd be surprised how enlightening that can be. 4 or 5 things, that not necessarily like if they all are working, you guaranteed to take a position, but there's probably a series of conditions that you can put together that, if true, there's a good chance you're going to be in a trade, shortly thereafter. That is the best place for you to start. All right, now then you can use some of the examples here. We can show you ourselves. We can help you develop something basic to start with. Definitely utilize our resources in helping you get these things off the ground. All right, so I don't want you to be intimidated by the fact that there's a lot of stuff on the chart, or you just don't even know where to begin. The first thing you can do is write stuff down with a piece of paper and just inventory this process, for the things that you look at the most. And then we can build off that. Okay, we can even use it as an example next time. In fact, I'll probably give everybody some homework and we can do that next Monday. All right. Okay. So let me show you a little bit about just how to do a replay properly, and then we'll take there's some questions. There was a bunch of questions that I want to get answered, some of which I know the answer to right away, and others I don't, but I'll at least get to them all. All right. All right. So you may have heard me say earlier that if you're going to go into replay mode, you need to turn this send orders to trade service to no. All right, the chart will not take the trades in replay mode if this is set to yes. They need to agree. Okay, if you're going to replay mode, the orders are not going anywhere. This has to say no. So I'm going to change these to no. Okay, and then what we're going to do is we're going to scroll the chart back in time so that the bar that we want to begin on is on the right side of the screen. Okay, so let's say we want to start right about here. So this bar is where we want to begin. Once you've got that in place, you go up to the chart menu up here and you go to this replay chart option, and you're going to see this control panel thing come up. Replay chart control panel. You can click on it and you get this little control panel. There are some choices. I really don't change anything here. You can replay just the chart that you're on, or you could replay all the charts in the chart book. I typically just replay all the charts in the chart book, especially since some of these are, talking to each other with the tick and, the crude oil and the bonds overlay and stuff like that. So I just leave that there. And then the replay mode, just leave that on standard replay. And then what you can do is push the play button. I think the speed might default to 1 or 20 or 30, but we can change this in real time. I'll just leave it at 30 for now and just push play. When you push play, you're going to get a warning that says the chart's going into trade simulation mode. Trade simulation is think of it like a back test and replay mode. All right, it puts a wall down between the charts and your ability to send any real trades to Transact or Infinity. All right, so you're going to have to say yes to that, and it's going to clear some historical simulation that I've done earlier. So I'll say yes to that, and you have to that prompt will happen a couple of times, and then it's going to reload and it's going to start replaying. So you can see what's happening right now is the market replaying from the 22nd at 30 times the speed of a 5-minute chart. All right, 30 times the speed. So the reason I don't do a lot of webinars on this topic is because how useful is it to go back and practice a day of trading where you already knew the outcome? All right, it's not very useful. My clients are trapped in the simulator enough as it is. This is, to me, another level of getting stuck in a simulated environment, which, in my opinion, becomes counterproductive very quickly, okay? So let me say that I'm not for this method of learning, with the exception of this sort of testing. All right, don't go back and replay the market when you already knew what happened, pretending like you don't. Okay, will not do you any good. All right, but anyway, let's sort of let this play here. So one thing, you can see the CCI is like peaking up a little bit at the bottom. All right, see the CCI is peaking up at the bottom. And one thing that this does not do is it doesn't replay the trades that I took as a result of the initial fill. So in my hypothetical simulator here, I've got some brackets. Like I have a 150 tick target and a 150 tick stop, which sounds like a lot in the NASDAQ, but that's because it is. But if I were to like bail on a trade early, this replay is not going to take that into account. Okay, it will not take into account the fact that I bailed on the trade early. So it's just it's gonna play the market as my system is set, meaning it's going to put in a 150 tick stop and target, and then it's just going to go from there until one of those gets hit, or maybe I get another signal or something like that. So the reason I'm saying that is that the replay can be different than what you did, because you had you actually may have taken trades on your own. All right. Okay, so let's just let this keep going. If you want to pause it, so you can hit the pause button and then you can speed the time up. So I'll just go to 60 and then you'll see it's going to really start going faster. All right, so I haven't seen the CCI. I think the CCI is going to start giving us a higher reading here if I remember correctly. But when it gets above 200 and the market runs up through that value area high, that's when the system is looking for a signal. All right, so it breaching the value area on its own is not enough. It's got to do it at the same time that CCI is hitting a positive 200 number. And the reason for that idea is that CCI is like a momentum oscillator, like a stochastic or MACD or something, and usually it does not sustain that momentum for that long. A 200 level reading is a pretty high reading on a CCI, and it usually doesn't stay up there for that long. That's the reason why we're using that value. All right. Okay, so bear with me here. Thanks for your patience, folks. Appreciate it. All right, I'm going to go just a tad faster here. I know I'm a sucker for this. And I know you can, Gigi, I know you can do the jump, bar by bar, but I was just hoping to see some of this happen in real time so I could show people, what it looks like. Oh, you know what? Okay, so now I'm starting to think that those trades that I had seen, those might have been trades I took manually. So I don't know if we're going to see them. Hang on, let's go ahead and stop this. I'm going to let it reload. That might be the case there. If so, I'm sorry about that, because that was a bit of a waste of time. Let's go to this one. All right, firstly, I'm going to turn off the trade simulation mode here because I want to see some of where the hypothetical fills I had were. Okay, this might be a better example. Let me just make sure that these are also turned off. Yeah, thanks, Gigi. I appreciate that. Okay, so these are replaying all these 4 indexes at a time. So left is the S&P, NASDAQ is to the right of that, then it's Dow, then it's Russell. Okay, so that was really fast. I'm going to take us down a little bit in terms of speed and scroll back just a tad. Okay, so what's happening here is the market is going higher. All right, I'm going to zoom us in a little bit. And what you're going to see is that the market goes up through the value area high, and then in the same bar, it's going to yield that CCI signal. But in this case as well, just as we discussed earlier, the sell signal doesn't come until the market rips through 5 extra points above wherever the value area high is at that moment. So 5 points in the NASDAQ doesn't happen it can happen very quickly, especially as the market is pushing higher like that. So it might look like it happens immediately, but it's definitely waiting for the high of the bar to exceed that value area high by 5 points before it takes the signal. Okay, so that's what it looks like there. So that's an example. This actually, look at that, it was right on the open, because I can tell that because this is the NYSE tick here. All right, this is the NYSE tick first coming alive. So in this situation, the market is going through the value area, but not just up to the value area high. It's coming up plus another 5 points, and then it waits to get short. And so that's how the trade plays out. And then, in fact, if I remember correctly, the Dow actually shortly after this, it took a reversing position, and there was a great rip lower in the Dow, which was like a picture perfect example of how the trade is supposed to work. But this is something that you could do to go back and replay with your ideas. I'm going to stop it for now because I don't want to be too distracting. This is something you can use to go back and replay the idea and test it and tweak it. And when you go into the there's something here called the trade activity log. All right, it's under the trade menu. And when you go to the trade activity log and you're in sim mode, you'll have this like sim1 account number here. All right, this is where you can see your trade activity. So you can see the trades, you can see the fills. This one, I stopped it right in the middle of the position, so we're not seeing a whole lot of movement here, but you can come back and look at what happened. So if you want to run this like for a whole day or something like that, you could do that. You can come here and then look at the report that shows you, how the strategy did for that day. So this is definitely something that you can make use out of. But again, use it for the right purpose. Don't just replay the trades that you already sitting there watching the market. This really is best for system development. All right. Okay. Now, again, copies of the files we can distribute to anybody. I do want to answer a series of questions that came through. So let me get to a couple of those. We're going to run out of time in a few minutes, so we can't spend. I won't be able to go into too depth of each one. But what I would like to do for next time is I would like folks to come back with maybe 4 or 5 conditions that you typically would like to see built into a system like this, and then email them to your representative in our office. And what we'll do is we'll pick a few and we'll demonstrate them. So you have to be okay with people seeing your criteria because it's going to be public. But I certainly would be interested to see, the kinds of things you're interested in seeing done in this sort of a context, and then we'll create it for you, and we can use it as a good example. All right. Yes, Scott, you can export the data out of Excel using the file or edit menus at the top of the trade activity log. All right. David asked earlier, what if you wanted the MACD differential to be above, say, 10,000? Well, you'll never have a MACD above that value, David, but you can use a number. So if you say, okay, I only want to take a position, or I want to be notified when the MACD is greater than 0.45 or something like that, you can use a hard number. You don't have to refer to another subgraph. You can actually use a hard number if you want to. All right. Jose had asked if you can use the auto trader to place a limit order once the condition is true. That is not possible using this function. It is possible using the spreadsheet system for trading, which is a little bit beyond most folks. It's not something we'll probably spend a ton of time on because it's a little bit more involved. Sierra documents that really, really well on their website, specifically how to enter orders in limit or stop fashion using the spreadsheet, Jose. So it's definitely doable using the spreadsheet system for trading on Sierra's website. It's just not something that we'll be able to cover, in this short of a period. But it is doable. Not using this particular study, you'd have to actually use the spreadsheet system. Okay. Yes, Rich, we will have the event recorded. It'll be up on YouTube. Okay. Jeff had asked, Patrick, on numbers bars, can you make the numbers color red or green when you have a 4-to-1 imbalance? So that is doable, Jeff. What Jeff is asking is using a numbers bars study, which is basically like an order flow study. The way that I'll show you here in a minute. Number bars. So what numbers bars are, for those of you who heard of like Delta or market Delta style chart, footprint style chart, something like that, it's kind of like this where you see the bids and the offers inside the candle. The place, Jeff, and I'm not 100% certain of this, but I can definitely look into it for you. The place where you measure these ranges is these values right here, the column 1% comparison, or column 1% compare. So these can be, actually, you know what? It's not even just that. I thought there was another place. Here, column one actual volumes. So I think if you were to put 100, 100, 400 here, Jeff, you would see that 4-to-1 ratio you're looking for, which means so you want to put maybe column 1 or range 0, range 1, and range 2 would all be the same in the same color. And it's only the range 3 that you care about, and that would be 400. So you could make range 3 a different color and range 3 down a noticeable color, and these would all be 100, 100, and 400. So that means you're waiting till you see 4 times the volume of either column 1 or range 1 or range 2 before you get the visual behavior. I believe that is the way to do something like that. All right, hold on. I'm catching up on the questions here, guys. Bear with me. Michelle says, Patrick, when you add the +5, isn't that kind of like a limit order? Yeah, I mean, it kind of is like a limit order in a way that you're specifying an or better price. But at the end of the day, Michelle, that really is a market order. So we should call it what it is. I mean, when that trigger fires, you might get filled worse than +5 points, right? So you're really not able to specify a price, and that really is by definition what a limit order is. It's you specifying a price or better. Jason, I don't believe you can use like a not condition, but you might be able to use the opposite of a true condition if you're I'm trying to think of a way where you could probably do that. So what Jason is asking is, can you keep an alert condition on true until like a not condition happens, trying to create a sequences of create sequences independent of bar count? There might be a way to do that. I think you'd have to get pretty creative. I'm pretty certain there's a way you could do that using the spreadsheet system, Jason, but I'm not sure you could do it using just this study. All right. Let's see. Larry says TPO shows repeating of a price in a time frame, but can you do a volume study that will not always match? Yeah. So what Larry, I think you're referring to is the fact that a TPO profile, which is based on time, and a volume profile, which is based on volume, may not match up all the time. A good example of when that happens is when you have a profile chart on that you've included all the overnight data, and the market sat at one price for an hour at night and didn't trade. So there's very little volume traded there, and there's very little interest in the market at that price level, but on a TPO chart, it becomes relevant because the market was at that price for an extended period. So that's why a lot of people who use TPO profiles take out the evening session, because there can be extended periods where the market is sitting at a very, very small range of prices without actually trading. And that's actually one of the reasons why I like to use the volume profile, just personal preference. Naresh says, can you use the trade management study for trailing the stop? Yeah, you could. I mean, you don't have to use the stop that I was suggesting as like a fixed stop or any one of the options that Sierra provides. If you want to have another study act as the stop, you certainly could do that, or you could put an opposing buy exit or sell exit condition, Naresh, and it could be met that way. Okay, Gigi, we already covered your question about the times. That's how far back we are here. Bear with me. Ed, I'm not sure about that. Talk to talk to him about that or our management or something. Okay. I don't know who your rep is. David, thank you, Patrick. Your webinars have given me a lot of good ideas. Oh, good, cool, great. I appreciate that, David. Kate, how do I learn the system? Well, Kate, if you're talking about the volume profile system I was talking about, I can send you the files. I'm willing to send them to anybody who might be interested in learning about them. It's just an idea. It's something I've been tracking for some time. And again, in my opinion, it's got some merits, but it can be destructive as well. I mean, counter trend trading is not for everybody, right? I mean, look at today. I mean, if you're not careful, you could really, you could get in trouble on a day like this. Michael, are there any other resources to teach how to do this type of automation? Well, we do have a lot of recordings on our site on YouTube about this, but Sierra actually, I'm not much for watching very long videos unless I know exactly what I'm about to watch. That's one of the reasons I actually appreciate what Sierra does, Michael, is because their documentation is outstanding. And the support board is very good as well. So if you want to sign up on their website and engage with the community of Sierra users, you can. But they have a very, very good section on their website that details this, and they provide very clear examples of how to use the spreadsheet system and examples that anybody could go through. You just have to devote and commit to doing it because it's documentation. So it's not the most entertaining reading, but it's very useful. If you just go to youtube.com/Infinity Futures, Kate. All right. David, I'm not sure what study was on the screen there. I think that was probably the numbers bars study, though, that was up on the screen a moment ago. Numbers bars, that's where you can see the bid and ask volume inside the bar. All right. Kevin, is it possible to get an external input to trigger from? From your last answer, I'd guess you'd have to use the spreadsheet system. Well, I guess it would depend on what you define as external, Kevin, because it doesn't have to be on that chart. So you could, for example, if you had a signal from a 60-minute chart that you wanted to import onto your 15-minute, you could overlay it onto the smaller time frame and include that in your condition. So I had a customer the other day who was doing this condition where he had a 2-tick Renko chart and then a 2-minute chart, and things had to happen on both of them in order for his condition to be true. So we overlaid the stochastic from a 2-minute chart onto his Renko, and then we were able to include it in the condition that way. So if it's inside Sierra, it can probably be overlaid onto the same chart and then referred to. Brad, I'll have to look into it. I've never used that condition before. I will check it out. I appreciate that. Jagdish says, do you have a buy or sell study set up based on trend trading and volume? For example, the 8 EMA is greater than the 20 EMA, and the 20 EMA is greater than the 50 EMA, and the 50 SMA is greater than the 100 EMA. I mean, you could definitely easily put that in place, Jagdish. That is simply a series of conditions with an and in the front and a big parentheses. So all you have to do is add the 8, the 20, the 50, and the 100, and then just create the ID number and SG, whatever the number is greater than ID number, SG, whatever, over and over again for each one. And then just put them all in one big parentheses, all separated by a comma with the word and in front. You could easily create that condition. 100%. That would be a good example of maybe something we'll show next time. All right. So I think that for sure, I think that for the next one of these presentations, what we should do is focus on maybe 3 or 4 setups that if you guys and gals are open to sharing, send your representative, and you could tell them in the email that I told you to do this, but send your representative 3 or 4 or a condition of maybe 3 to 5 things that you would like to put into a filter, and let's see if we can't replicate a few of them, and I promise I can show them in a much more organized format than what I've shown here today, but I'd certainly be happy to do that. So let's make that kind of our homework for next time. All right. And then let me see. I think I missed a couple other questions here. Let's see. Jose, we covered yours. Yeah, standard deviation, we could include that, Al, for sure. Naresh, I haven't really done one on the spreadsheet system. I would admit I'm a little bit more of a novice on that, and it just is not as interested for the vast majority of our clients because there's so much you can do with it, I suppose. But we might have an expert, a third-party person come in who I know does a lot of that, and that might be a better use of everybody's time. All right. Greg says, can you give an example of an OR command? Well, an OR command would be, as an example, Greg, like let's just take the CCI off here, and our system's going to go into maintenance mode here for a minute. So let me just disconnect us so it doesn't try to keep connecting here. A good example of here's an example of that. Like, let's just add the CCI again. So the CCI has a few different subgraphs. So the line 1, line 2 is this line up here, and line 3 is this line down here. So an example of an OR condition would be if the CCI is above SG3 or below SG4. So meaning the CCI is like up here or it's down here. All right. So if you were to do a condition based on that, you could say ID1.SG1 is greater than ID1.SG3, comma, ID1.SG1 is less than ID1.SG4 in a parentheses with the word OR in front, like that. So what you're getting then is you're getting the color condition only when the CCI is either above that upper line or below the lower line, like that. So that would be an example of an OR condition, meaning this is true or that is true. And if either are true, then the condition is true. All right. Okay, cool. Well, I appreciate that. That's probably where we're going to have to leave it for now, folks. I apologize for running a little bit long. A lot of questions. So we'll get this up on YouTube within a day or so. And then I think for next time, what we'd like to do is let's have everybody, if you're interested, and I can't promise we'll get to everything because we're probably going to get a lot of email. But if you have a series of conditions that you'd like to see worked upon, then we will present those next time. So email them to your rep in our office. Let them know that we instructed you to do so. Anybody who wants copies of the files that we've got here, you're welcome to have them. Just send an email to your rep and we'll get them over to you. And we'll go from there. All right, so I do appreciate it. I'm going to read some risk stuff and then we'll close the room up for today. Thanks again for coming, everybody, and we will see you next time. All right? All right, folks, thank you. Trading futures, options on futures, and retail off-exchange foreign currency transactions involve substantial risk of loss and is not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not indicative of future results. Thanks again, everybody. Thanks again. Have a great night, everybody. Bye-bye.